Hi, morning everyone. Welcome back to Morning Cup 8. Aiman here. Right, so looking at the S&P 500, well, rebounded by 1.7% to close at 7,437 points on Thursday session, stating a sharp recovery from the previous day, which is the Wednesday's Fed sell-off. So the positive sentiment returned to the equity market following the better quarterly results from Microsoft, which also surged over 50%, ignited the broad rally across the AI and also the chip makers sector. Also, investors also bid up the Amazon ahead of its earnings release, weighing on its massive AI infrastructure, capex, tracking towards, if you see here, 200 to 220 billion. So from here, you can see that the index is jumping, jump higher, crossing above the key level yesterday, eyeing towards the the 50-day moving average, and also the 7,500 resistance level. Right, so looking at the China A50 futures, if you trade these futures, right, well, it dipped by 0.6% on Thursday session as equity market experienced a market peaking yesterday. I think while the leader pledged to accelerate the fiscal spending and adopt the incremental policy to support the second half economic growth, I think the absence of immediate or the large scale consumer stimulus detail, coupled with the overnight spillovers from the Wall Street sell-off from the Fridays has kept the market sentiment cautious. And also, I believe the sentiment right now has been cautious as the investors are monitoring closely on the policy announcement as well for the China market, right? Looking at the WTI crude oil futures, well, it took a breather yesterday, rebounding from the, rejecting from the $86 level, dipping by around 0.83% to settle at near $84 per barrel on Thursday session. Right, so the price consolidated as the market participants digested the alternative supply routes out of the Middle East, with vessel data showing that the oil continuing to leak out of the region via Red Sea and some of other bypasses as well, despite the ongoing Strait of Hormuz disruption and active US and also Iran war. So yeah, despite that, we are still holding on negative trading bias intact, judging by the recent market volatility. So let's see together if the price managed to pass lower after this formation of dodgy candlesticks yesterday. Looking at our Malaysia market, the FBMKLCI rose by 0.28% to close to its intraday high at 1720.44 points on Thursday session, while the FKLI futures gained by 0.23%. The local equity showed off the overnight weakness from the Wall Street hawkish Fed sentiment, driven by the selective institutional buying in the consumer heavyweights like Nestle, and also strong corporate earnings highlighted at the from the Bursa Malaysia Berhad. Also technical wise, if you're looking at the FKLI, we noticed that the 20-day moving average has just cross above the 50-day moving average now, showing that the bulls may return if the bullish momentum to follow through. So we stick our resistance at 1760 points, together with 1008 points level, with our stop loss remains firm at 1680 points level. Also looking here, this shows a broad mixed sentiment across Bursa Malaysia, with defensive support in the core banking heavyweights like Public Bank, although it jumped by 0.19, 0.2%. Maybank jumped by 0.18%, and also some of other names like CMB, MBank as well, alongside gains in consumer and also the industrial counters like Nestle, up by 2.81%, and also BCAM also. However, profit taking in the tech sector led by the Unisem, you can see here, MPI, Lufu, alongside with sharp drops in the mid caps, small to mid caps like VS, Tenco, keep the broader market gains check, or I would say balance, right? So taking a look at our Malaysia trading stocks, today we have Zetrix AI, formerly known as this Zetrix AI, right? The stock is on its penny breakout formation, higher at 72 cent level, strong volume as well. So with that, we expect the momentum to keep bullish and stock able to propel and test higher to its next resistance level at 75 cent. Together with the second resistance at 77 cent level, and also do keep an eye on the support of 70 cent level, 70 cent level also, right? And also next we have Synergen, right? So the stock is experiencing a breakout at 65 cent level. First resistance is at 70 cent level, and also the second resistance is at 75 cent level. If this stock to clear below this 60 cent support, well, this could reverse course and trend lower together below this 21-day moving average. Well, if you see from yesterday's move, the volume is quite high. Yeah, just let's continue to monitor for these synergens, and do put it in your watch list as well for today's trading opportunities, right? And lastly, for the FCPO, well, actually gained by 0.34%, right? To close at 4679 ringgit per ton in Thursday's session. Well, continuing its small consolidation below this 4,700 ringgit level. So I think despite the consolidation, the weakness was primarily driven by the pullback across the edible oil market. However, the long-term support also remains anchored by the looming El Nino. I think yesterday we have a report on this as well for the plantation sector by Lineng, right? We still keep our positive stance remains intact, potentially eyeing for the 4,900 level and also 5,100 resistance level, and our stop loss remains strong at 4,530 ringgit level. So yeah, that's all from me, and I pass the floor to Max. Thanks everyone, and happy trading. See you next week.
Right, thanks, Aiman. So we have a report on Tenaga Nasional. This is on their renewables asset in the UK. For Tenaga, we maintain our buy call and target price of 16.50, which presents about 13% upside with a 4% yield. We recently visited their renewable assets in the UK. So they currently operate about 908 megawatts of capacity in the UK. And all of these, 60% of these are largely on long-term contracts, which also help to offset about 470,000 of CO2 equivalent tons of carbon dioxide. Management has about another 360 megawatts of project in the pipeline, which could grow its portfolio to about 1.2 gigawatts in the UK. Overall, we believe that their UK subsidiary, which is called Vantage, were able to grow their capacity about 40% to end 2030, which makes up roughly about 12% of their total renewables and about 6% of their total generation capacities. All in, we believe that even as they continue to add more capacity for the international assets, we believe that the Tenaga's renewable mix will largely be domestic driven. Hence, we are still looking at the Tenaga RE mix to grow to about close to 50% by 2030 from 23% currently. Having said that, we believe that the international investments is important because this allows for them to improve their technical capabilities as well as to improve their project economics as well. The other thing is that the Tenaga also will be releasing their second quarter results on 27th August. We do expect earnings to improve on a sequential basis, mainly because of lower effective tax rate. Do recall that the tax rate was more than 30% in first quarter, and management is still guiding for tax rate for the full year to be about 24%. Hence, we do expect tax rate to taper down to the teen levels in the fourth Q, essentially to average out about 24% for the full year. So all in, we still continue to like Tenaga, and Tenaga is just going to give you about 4 to 5% yield, and it's still the best big cap pick for the whole energy sector. I'll just stop here and then I'll pass on to my colleague for the next presentation. Thank you.
Okay. Morning, everyone. Thanks, Max. Okay, so we have a Bursa Malaysia results review note. This is the second quarter earnings call where the 2Q net profit, they reported a net 72 million ringgit. This is up 26% year on year and flat Q on Q. So the first half sum was about 145 million ringgit, up 15% year on year at 51% of our and 50% of consensus full year estimates. Really, the earnings growth was driven by top line, very robust top line growth. With look at the equities traded volume. Second quarter, this was up actually 47% at 3.5 billion ringgit. And the other one is, of course, the derivative side also. The average daily contracts was up about 15% year on year, thanks to the increased trades in the FCPO contracts. While revenue was robust, there was also some increase in also costs. If you recall, there's this new regulatory fee structure which kicked in, and also higher talent and technology investments. So, this was somewhat of an offset, but all in 26% year-on-year growth in net profit. And with that, they also declared a higher dividend per share of 60 cents and 16.5 cents or 92% payout ratio. Briefing highlights: management has maintained their headline KPIs, but they revised up the 2026 total IPO market cap to about 34 billion ringgit from 28 billion ringgit. They see a strong second half IPO pipeline for mid as well as large cap companies. On the My Value app, they see My Value Up program. They see this broadening corporate interests. While in terms of the recently announced Malaysia-Hong Kong capital market collaboration, they did provide some areas where they think they're going to work on. But really, we think this is going to be more of a long-term thing. So all in, there's no change to our forecast, but our target price is just tweaked slightly to 9.80 cents from 9.95. This after we roll forward valuations to FY27. We continue to maintain a buy call on the stock. Okay, that's all from me. I'll pass it to the next speaker.
Thank you, David. Good morning, everyone. This is Vanessa from the Warrants team. Right, so just a quick one. I would like to bring attention to yesterday's top traded warrants. So top traded warrants are normally those active warrants. All right, so that's one that I would like to put under the spotlight would be Maybank C2R. So I'll update a little bit on it. All right, so these are the active warrants yesterday. Maybank C2R was top with 11 million units traded yesterday. Sunmet CD next to it, and then Mbank C62. So the rest are Hata C3J, 99 Speedmart C40 as well. All right, so from this list, we actually saw two banking stocks, call warrants. That is Maybank C2R and Mbank C62 that is in the list. All right, so maybe just a little bit of analysis on let's see why the crowd actually likes Maybank C2R. So from here, this is actually a snapshot from RHB Warrant website. So you can actually tell that the sensitivity of this warrant is at 3.5 ticks, and the effective gearing is at 10, near to 11 times. All right, so if you know how to actually spot a good warrant, you actually know that Maybank C2R is a very good warrant with good responsiveness, where the sensitivity number of ticks is lesser, and higher effective gearing. And when you see an X, right, this is actually the multiplier. All right, so the bid price was around like 7 cents, and this is for Maybank C2R. And I will actually show you on how do we actually look at it when the sensitivity is at 3.5 ticks. All right, so this is the information about Maybank C2R call warrant. So when we actually mention good responsiveness or good sensitivity, we actually look at lesser ticks of sensitivity. And why so? Because the sensitivity means that the number of ticks that the mother share has to move so that the warrants will move. So in this case, Maybank, I'll just take this range lah. So 10 ringgit, 86 cents, 88 cents, and 90 cents. The warrant price will go from 7.5 cents to 8 cents. Okay, so now do a very simple calculation by percentage. Compare from 10 ringgit and 86 cents to 10 ringgit and 92 cents, and versus 7.5 cents to 8 cents. Yeah. So you actually notice that the percentage gain in Maybank C2R would be higher than the mother share. So, yep. So, of course, for sure, you will see that there's actually not much difference. I would say there's actually no changes in the bid price over here. For all warrants data on the RHB website, on this one, right, we actually take the previous day closing compared to current price. But yesterday closing to closing, it's still maintained at 7 cents. But we actually, for some of the underlying shares that's actually very active during the daytime, you actually see it move maybe from a range to 10 ringgit 84 cents to 10 ringgit 92 cents. Then you will be seeing the changes from 7 cents to 8 cents. And that is the example. Okay, so Maybank C2R will actually, I would say it's actually quite a competitive call warrant if you are bullish on Maybank shares. All right, so that's another one that I would like to share with you. That's another banking counter as well. Let me share the website lah. It's a live one. Okay, so this is the Warrant website. Yeah, and this is price metrics. Okay, so if you are trading with RHB, so RHB warrant, we actually have prepared live price metrics for all warrants that we issued. Okay, so you just need to go to the warrant website and then you just key in, just search on the warrant that you want to look for. Yeah, so that's another warrant that's called a public bank public bank C2L with an exercise price of 5 ringgit and 5 cents. So some people don't really care about the exercise price at all. They will look directly at the sensitivity and also the effective gearing. So at one glance, looking at public bank C2L, you'll be able to see that the sensitivity is actually not bad. So for public bank as a very active counter, very active share, you can this is actually quite suitable for short-term trading. So what you need to do is that you have to do your charting over the underlying shares, and then you actually have to log onto RHB Warrant website to look at the price metrics to identify what is the entry price and also the exit price for these warrants. So Public Bank C2L, Maybank C2R, and MBank C62 will be quite a competitive choice for those who are bullish in these counters. Okay, so if you have any other questions, feel free to call us because we are actually reachable at this number. All right, so that's all from us today. Thank you so much for dialing in. We'll see you on Monday, RHB Morning Kappa at 8 at the same time. Thank you.